What's going on, Squadron? How's everybody doing? How's everybody's week been so far? Hope everyone survived the snowgeddon that's kind of hit some of us here in the southern states of the U.S. How's everybody doing? Let me hear from you guys. Ryan, yes, doing well. Excellent. Light is on today. Yes, we had some friends in Texas who lost power. Imagine being in the snowmageddon and losing power, not being able to heat your home, reverting to old school blankets and sleeping bags. Yeah. So Mike T, you live in Nashville. Nice. Ben Hilton had past 2 weeks missing all the snow. Well, you you haven't missing much unless you really like the cold weather. I actually like the cold weather, believe it or not. Yeah. Yep. It snowed in Mexico. What is that like a first time ever? Call Guinness, World Book of Records. The kids missed out, right, Mike? Never want the market to close, but glad it is today. That's right. You're glad that it's closed now. Okay, got it. Stuck in MS trying to get to Dallas. Yeah, crazy world. There were some crazy pileups on the interstates in Texas as well. So be safe if you guys venture out into the craziness. So let's start by looking at the overall market. Let's take a look at SPY. SPY literally just hit a all-time high just Tuesday, right? So just a few days ago, all-time highs here on this candle right here. White candle gapping up, right? If we were to look at it on a weekly, I mean, gang, this still looks pretty bullish to me. Still looks bullish. Not a lot, not a ton of excitement going on here in this level, but let's let me reset. Okay, there we go. Boom. So SPY just kind of hanging out near the all-time highs, right? So we had some gap downs, kind of reclaimed gap down. And that's kind of what's happening on SPY. I'm still very bullish. I'm right now about 70% in cash. Not that I necessarily plan that as much as haven't had tons of opportunities to sell puts and do other things when things are rocketing higher all the time, right? So Qs, pretty much same thing. Previous all-time highs just a few days ago. Nothing super exciting, just kind of hanging out at these levels. And to me, this looks like a lot of, we might get a little bit more of a pullback and then continue higher, but you guys can see that this action right here looks similar to some of this other stuff that we've seen where it kind of pops below the 10 EMA for a little bit and then continues higher. So not a lot going on right now out there with the overall markets. There's lots of SPACs. So we may rename real life trading to real life SPAC. What do you guys think? Is that a real life SPAC? It's craziness. I heard Shaquille O'Neal, the SPAC attack, is launching his own SPAC, which is kind of crazy. Yeah. So Jason says what they call a bear shack candle today is supposed to be gap and go. It's like a failed gap and go, right? Yeah. Yep. Not on this one. Let's see. We were looking at SPY. So not even that. Let's see. Let's look at IWM. Yes, this didn't quite gap up. We did get our little trigger today to jump into IWM. I've actually never traded IWM before. I don't know if you guys have, but I prefer the Qs when it comes to buying options or trading. I really like the Qs. I don't know why I have this affinity for the Qs versus the S&P versus SPY. Yeah. So yeah, we need one of those sound effect buttons. It's a trap. It's a SPAC. Yep, that's a great idea, Michael. That's amazing. Can you switch on your flag indicator? I think you're talking about the distribution days, Edward. I actually was working on that earlier and it's currently busted. So I apologize. I was trying to fix it and, you know, coders problem, but it's currently busted right now. who knows what it's going to show. I was trying to get it tidied up before it came on and ran out of time. So that's the Qs. If we were to look at the diamond, same kind of thing, just resting here at all-time highs. I wouldn't be surprised if any of these have a little bit of a pullback to the 10 EMA before continuing higher. But as much as craziness is going on in the world and politics and Brexit and all that, at the end of the day, I would still be bullish, right? I haven't seen anything to be overly cautious about. Obviously, I'm not going at all-time highs. You're not going all in on buying whatever you want at the highs, but there's no reason to not continue to be bullish. Yeah. Justin said he uses the weekly credit spread. I know every Monday it's a good. Oh yeah, nice. So you use the weeklies, yeah, on IWM. Nice. Yep. Some good consistent returns that you're able to carve out there. Yeah, absolutely. I get it. So let's jump into some stocks here. DataDog, not a lot happening here post earnings. It did have a little bit of gap down, continued lower just a little bit. But if you guys were to look at this overall, we're still kind of chopping around, still kind of just going sideways here. Not a lot of action going on DataDog. If we were to look at something FSLY, where I have a pretty good size position on it, and I set up some callers. I closed my covered calls. I had a 155 and a 165. Can you guys believe that covered call that I closed? 90% gone. I sold it on this day right here. So covered calls, collected some premium. I have a collar on this, right? So even though this made a $40 move lower, as painful as that was, I did collect my premium. I do have some puts open on this as well. So FSLY is my current dumpster fire. Not the end of the world, but you guys know what FSLY does. It makes the internet faster, right? Thus the name FSLY. So I'm still very bullish on FSLY overall. Let's see if I can. How do you make these lines thicker? There's a way to do it. I'm not sure how. Oh, here we go. Thickness. Boom. Okay. So you guys can see we're kind of resting here. If we were to look at it on a longer term moving average, kind of just hodling to that 200 simple moving average, just hanging on for dear life. That's what's happening on FSLY. For those of you who are interested and have a little bit more experience in selling put options, hope you guys got in on some good triggers, some green arrows, some green dollar signs to sell some put options. Once it gets below the 200 simple moving average, I do not sell put options. However, I am still bullish in FSLY, and I do have options on FSLY. However, I'm not selling anymore once we cross below the 200 simple moving average. Yeah. Let's see. Sorry guys, I'm trying to catch up with the with all the chat here. Wish would have followed Momo and exited on February 10th. Yeah. Too bad, so sad, right? But now, Michael, now that you're in, now that you've ridden the ride lower, gang, this I love the way that this looks. Obviously, I have shares, and I kind of went over the waterfall too. I do have some put options protection, of course, in place. However, if you look at what happens with these kind of maybe a good week and a half of selling, you'll see right here when this happened, you see what comes next, and that is this opportunity to get in and make some gainage, right? And to jump in and follow the trend higher. So that's FSLY. Donna, thank you. Great question. Why don't I sell below the 200 simple moving average? And I do own below the 200. Obviously, if I already own either the shares, if I'm long the option, the calls, or I have short puts. What I don't do is I don't add to short puts if the price action is below the 200 simple moving average, and that's because that is a long-term support. So you guys can see the last time was over here, post-COVID. So back in May was the last time that we went below that. And most stocks, this is still a little too new of a stock, But most stocks, once they kind of close below that 200, typically what happens is you close below and it retests and then typically goes lower. So that's typically what happens. That doesn't necessarily mean that's automatically going to happen in our case here, but that is the thought there behind the closing below the 200 something moving average. And because of that, I don't necessarily want to sell more put option below. So here's another dumpster fire. This is another stock that's been on my watch list who hasn't really done much for me. I am reevaluating some other, I'm looking at a few other stocks, which I'll tell you guys about in a minute that might make Matt's watch list. But yeah, Donna, hopefully I answered that question. Yep. Yeah, so Michael's getting long some call options on FSLY. Yeah, absolutely. I have calls still. I'm long calls, I'm long puts, and I'm long shares. So kind of a mixed bag there. But if we were to look at the 200 simple moving average, Donna, on this is a great example. Is what happens is typically it goes below, it tries to reclaim, and typically it'll roll over, go lower. In this case, it kind of went higher and then kind of rocketed higher. But you guys can see how many times when it went below, when it went below the 200 simple moving average, it went lower and stayed lower for quite some time, right? And so that's kind of the idea there. Yep. Okay, so let's take a look at TWLO. How many guys are in TWLO? So I'm not in this. I don't have a position on this. My let's see. I have a live account. This is my daughter's one of her college education accounts I have running live in Momo. Let's take a look, see what this has in it. Okay, so it's just down this smidge today. So in this account trades Momo. So we have the Mongo database, Pinterest, CrowdStrike, TeleDoc, TWLO, and ROKU. So actually we do have TWLO. We're down just a little bit on that in our in this account. The cool part is that TWLO, like most tech stocks, have enjoyed a pretty good run up just because of the cloud stocks, just because of COVID and lots of web-based software tools making some gains. So yeah, that's TWLO. Got lots of opportunities to jump in, and TWLO again, be bullish. Now, this is the one exception that I would never really jump in like this, where you get a signal to jump in and we close below and then we jumped higher. Now, in this case, it happened to go higher based off of earnings, right? So that's not a normal thing. So I typically don't like to buy like this at all-time highs. Normally, when I use the 10 EMA strategy, it's on something like this, where it made a new high and then it pulled back some and then it continues higher. That's like the ideal, we'll call it the textbook setup for TWLO. Yep. So that's TWLO. We're going to take a look at it on a little bit bigger time frame. Turn these guys off for just a second. I mean, gang, does anyone see something in here that I'm missing? But I would still continue to be bullish, right? Now, because of the craziness of cloud companies and the valuations, we are in nosebleed territory and have been for quite some time. If you guys want to take a look at my list and look at these price to sales, Robert, I know you're going to be super excited about Shopify. It's trading at almost 72 times revenue, which for those of you who don't understand revenue multiples, usually the faster you grow, the higher the multiple, right? So companies that are growing at 96% sales quarter over quarter, and that's just happens to be a spectacular quarter because of COVID, because people are at home, people are getting laid off, people are starting new online stores, you know, they're getting unemployment, whatever. And when I ran my e-commerce software company, our best times literally were right after 2009, right after like the foreclosure crisis. That was a great time. People were already being laid off. They were already getting unemployment. They're like, hey, I might as well start an online store and start my little side business, you know, selling whatever, handmade leather items, chocolates, whatever, selling it online. But because of all of the cloud stocks have enjoyed such a nice run up, I always thought like 30, 35 times revenue is a high number. We're obviously double that now here with Shopify. So some of these companies long term, I think there has to be some kind of a pullback, but we're going to continue to go with the trend as long as it's higher. But something to be mindful of, I would not buy, all in on some of these companies at all-time highs. Yeah. If your stock doesn't have at least a 900 PE, it's trash. So the way I think about it is so growth companies, I don't typically look at the PE. As you guys can see here, there's usually not anything. And the price to earnings is one thing, but growth companies are usually measured on a revenue multiplier. And here in this case, let's just say it's 72 instead of 71.59, just round up to 72. What that means is if Shopify went sideways, revenue was sideways, it would take 72 years of revenue to equal its current market cap. Now we're talking about, a company that has, what is their revenue? It's hundreds of millions. Okay, so it's billions. So talking about a company that has $2.46 billion and it's worth, currently the market cap is worth almost 72 times that, their revenue, right, through their sales. And so that's way up in the nosebleed territories. Most, like 10 years ago, most venture capital companies were valuing companies at 10 to 15 multiples of revenue. So 10 to 15 is a kind of a sweet spot. Obviously, if it's a leader like Shopify, it still would get a premium above that 10 to 15 times multiplier of revenue. However, I don't know anyone who would, any venture capital companies who would pay that now. Obviously, for early startup companies, it's a totally different formula. When you have little to no revenue, totally different formula. But that's kind of Shopify. It's way up there in the nosebleed. So same thing with Twilio. Let's see, what is Twilio? Twilio's up there as well, I believe. Yeah, so it's not as bad. 41 multiple. Yeah. Yep. So yeah, that is Twilio. Any questions, gang, on this so far? Sorry, I'm trying to stay focused and kind of get through this list real quick, but I got some stuff I want to show you guys. And I have maybe a potential guest who's going to come on a little bit later. We'll see. Fastly and AYX. Yeah. So we went over Fastly. So AYX, same thing. It's not doing a lot. It's kind of a current dumpster fire. I would not sell any puts below the 200. So put sale options are off the table for me. However, at this level, if you wanted to buy like a long-term call option, if you wanted to buy some leaps, maybe that might be wise. If you can do like a 40 delta, something like that, something that's slightly out of the money, you can certainly make a case for that. Obviously, it's kind of held up pretty well during some of this here, 1, 2, 3, 4, 5th time now, something like that. So you can certainly make the case for that. I am going to be retiring AYX off my current list and replacing it with something else here in a bit. Haven't quite decided on that. So next is Peloton. How many of you guys like trading Peloton? This is one that actually is on my list too. Let's see, their sales is 13. So it's a smaller price to sales, but their gross margins are a little bit smaller than these software companies who have 50, 60, 70% gross margins. So just to put this in context, gang, if I sell something for $100, my gross margin for AYX in this case would be $91, which means it costs me $9 to sell a $100. To sell $100 revenue, it costs me $90. I'm sorry, $9 is my cost. $91 would be my gross profit, right? And so that's super important, especially when compared to something like Tesla, where they have a lot of capital costs. They have a lot of manufacturing and the actual cost of goods that goes into the leather and the rubber and the hardware and the metal, all the stuff that makes up the actual component of the vehicle that Tesla's producing. So on a $100 sale, how much do you get to keep? Well, in this case, you get to keep a very small amount. You get to keep $21 out of 100. AYX is $91 out of 100. So just a little thought there. When I was, I think it was like 18 or 20 years old, I read in Entrepreneur Magazine that there's two things that have massive gross margins. One is perfume, right? So if you think about it, you get a glass container with a little bit of chemicals, lots of margin in that, sell that for $150, right? No big deal, lots of margin. And the other one was software. Yeah. So Sean, you've heard me tell the story before, software. And so that's why I have a little bit of an affinity to software. Some of you guys know I actually ran a software company for 14 years. I was a CEO and sold out a few years ago. And so I have a little bit of a special place in my heart for these software as a service companies, because I was in the thick of things way back when, a few years ago, doing the same thing that these guys are doing. We actually competed against Shopify, and we're not winning that battle very well. So sold it and moved on. So now I get to hang out with you guys, right? So if you were to look at Peloton, just kind of going sideways a little bit, you can certainly make a case to kind of bounce off in this old resistance level, kind of building some support on Peloton. If you were to look at on our 78-minute charts, currently in a little bit of a sideways action, going a little bit lower, but again, lots of opportunities out there on Peloton. I do like Peloton. I do wonder about lots of the competition with Nordic Track and some other companies that are providing similar / better / competitive tools, hardware. And I don't know, a bicycle with the TV on, I'm not sure how unique and innovative that is, but for now it has a kind of a cool factor, cool component. And who knows, I might get a Peloton one day. So I can do my biking and not break my collarbone, right? I don't think anyone's ever broken a bone riding a Peloton. That'll be a first. That does happen. So Mongo database triggered for me. I am long Mongo right now. It triggered for me both on the 10 EMA. See that, gang? And on the 78-minute chart using Momo. So I am long here. I decided to switch it up a little bit today, and I actually got in with some options. So right here at the close of this candle right here, got in with some options. And the price action actually went a little bit higher. And so I went ahead and just put my order out there. And I just looked right before we started this session, and boom, I'm in. I got filled and up just a tiny bit. But at the end of the day, I think Mongo is a really cool company, Mongo database. And for any of those of you who follow my, let's see, where is my time capsule? This is one of them in there. So this is what my time capsule looks like today. Is up 32% and change. It did have a little bit of dips this week with FSLY and some other sell-offs that happened in some of these companies. So, we started this in December 7th, and I basically just bought $20,000 of each of these 5, and it's currently up 32%. And the idea is this is going to be a time capsule, and I'm going to open this. I'm not going to actually trade it. I'm just going to look at it and observe it. So real money in here, December 2025, and we're going to pop that open and see what it's worth here in 5 years. So I've got another 4 years, 10 months to go, 58 months left on that time capsule. And I got in on December 7th. Yep. December 7th. Yep. Mike has a question. If you miss placing order at the close, do you set up a limit buy for the closing price? Actually do. Yes, that's a great question. And that's exactly what happened on Mongo. So imagine, see the close here is 414.71. So if I was to set this up, Mike, if I did not get in right away, if I was, walking the dog, doing whatever, I just missed it for some reason. I'm going to put in an order here at this level. Now, obviously, if you're using options, the pricing is a little bit more dynamic. It's not quite the same apples to apples for stock, but if you were to, let's just say you're going to use stock, you can absolutely keep an open order here. And even if you miss it, I usually keep it open for a day or two. If it's made a move higher, I'll usually just take the order off. And then if, I'll wait for another entry. But at the end of the day, gang, your job is what? What is your job as a trader? Your job is to execute the plan, and that's it. And so my plan says I'm allowed to enter right here. One of the reasons I used options here was this exclamation point, which I get asked this all the time. The exclamation point means what? It means we sold. It's kind of like a fade where the candle went a little bit higher and then sold off. And so if you're using call option, you're buying call options, the implied volatility chilled out a little bit when it went lower, right? And so that's the idea. So that's how I do it. Yeah. Yep. Aloha, welcome. So that's Mike. Did that answer your question on Momo? I definitely set up the order, and that's exactly how our trading automation works too. Is we don't have any any open orders right now because they all got filled, but it'll literally trigger an open order and just sit there, and it'll sit there and wait to get filled. So yeah, that's the only way that you can do limit orders. You don't necessarily want to buy a market order as it's going higher, especially with options on these $400 stock companies, because the bid ask spread on higher volume stocks on the options piece is even sometimes it's pretty significant. So you don't want to necessarily jump in with a market buy of options. You can most of the momos that I've observed, there's plenty of time to get in. Even right here, gang, is if you missed, well, in this case it went lower, would have got filled immediately and then gone higher. But any of these, you have a good couple candles, right? Which each candle represents 78 minutes. So you got a good 2+ hours to get in order. Sometimes you have several days if it's chopping around going sideways. Again, same thing here is if you get in here and you missed, let's do it this way. So if you were to miss this trigger for whatever reason, and you didn't get in right there, you just put your order in, you're waiting, the very next candle you get filled, right? You'd be down just a little bit, boom, back profitable, and then goes higher, right? So that's the idea. And again, because it's green shaded, it means we're still bullish and we're going to make some highs. Yeah. So that's how that works. Yeah. When I say automated, does it mean TOS makes buy and sell dynamically without you doing anything? Close, Mike. So I know I do use Thinkorswim for manual trades. I do have a live account, which you guys just saw. I'm using my daughter's education savings account, and it's connected to the automation. And what it does is the trading view with Momo will send the buy and sell signals to this tool that I mentioned, which is Traders Post, and it will actually place the orders for me. So in this case, I have my daughter's account here. So this is Trading View. And you'll see, gang, that it's live trading. This is a live account connected to TD Ameritrade. So what you do is you set up an account, you connect your live account, which is currently, I think it's Traders Post, TradeStation, Robinhood, Thinkorswim, and in the next 30 to 45 days, Interactive Brokers is coming to Traders Post. And so let's see what options we got here. TradeStation, TD Ameritrade, oh, now Alpaca, yeah. So these are the current ones, 30, 45 days, you will have some, Interactive Brokers. And I know like most US based traders use TD Ameritrade. Obviously, if you're in Australia or elsewhere, internationally, Interactive Brokers is a big, it's used a lot. It's kind of like the international version of TD Ameritrade. So yeah, does that answer your question? Yep. So that's kind of automation. I try not to spend so much time on it because I realize not everyone is in a place to do automation. Not everyone, can understands Momo or even uses Momo or even likes Momo. Who knows? We do get emails from people who placed one trade with Momo. It didn't work and they quit. Like never again. But again, gang, it's kind of funny because at the end of the day, if you were to flip a coin 10 times and you get half the time you get heads, half the time you get tails, you can still be profitable. If when you win, when you get heads, you get $2. When you lose $1, right? You have the 2 to 1. When you win 2R. When you lose 1R. Like you can do that all day, every day. And just maybe the first flip, you lose 1R, right? And then if you quit and give up and go strategy hop and find something new, a brand new strategy and start all over, you're just never really going to get anywhere. And I know personally, I spent a lot of time trying to find the perfect strategy until I realized one day there is no perfect strategy, right? And again, if we were to take the most profitable, the most successful strategy ever, right? If we were all to agree, most successful strategy ever, and we were to put it in the hands of someone who can't execute the plan, would that still be the most successful strategy ever? No, it would not. Why? Because you're going to see some red at some time in your account. It's going to happen. No one, as Jeremy said today on Twitter, no one ever picks the high, the all-time high. No one ever picks the exact low. And so that means you're going to always leave money on the table. You're always going to be red at some point, and you just have to learn to be okay with that. It's not the end of the world, right? And so I know when I talk to a lot of new traders, they feel like, they'll say, well, Matt, how do I know the difference between my bad trading and just a trade that just didn't work out? And I feel like that's a really good question. It's a big question. It's not super easy to answer. But of course, everyone has to get in the groove. And if your job is to execute your plan and you did everything right and you gave yourself this A+ or F, if you did it exactly and you have this like extreme accountability where you executed the plan, you did everything you're supposed to, and it still didn't work, then you didn't do anything wrong, right? You did everything right. It just didn't work that one time. Everything works, just not all the time, as Jeremy says, right? So that's the idea there on trying to just jump in and, figure out your place, figure out some strategies that work. Momo is probably one of the more successful, most popular strategies for swing trading. We do use a 78-minute chart, which means you get 5 candles in a day. That's it, just 5. 5 candles equals 1 day. Now, what's interesting is that for those of you who use a 5-minute chart, you get 78 5-minute candles in a day, whereas I only have to think about 5. You have to think about 78-minute chart. So Don, I am able to set an alert if you were to go into here and go into the trend following and then go into trend reversing one. So that's how I'd set this up on Mongo. If you wanted an alert, I do have the iPhone app on my phone. So this notify on app, I get a little alert on the app itself. So I literally can be anywhere. I can be out to lunch with my daughters. I could be, traveling with my wife. I can be doing anything and just get an alert. And you just know what the times are. There's only 5 times a day because there's only 5 candles. And the close of each candle, you'll know if you get an alert. So this candle closes at 9:48 Central, 10:48 Eastern. This one closes at 11:06 Central, 12:06, right? And you just add 70 minutes to each one. That's your time, your local time zone, when you can get 5 alerts in a day, and that's it. And so you can literally be in meetings, work full-time jobs. You just get 5 alerts a day, and sometimes you'll get several alerts. So obviously, if you have a watch list of 15, you could get up to 15 alerts. I've never really seen all of them move all at the same time, but that's the idea. Yeah. So Chris, you cannot set them for all stocks in a watch list. You have to set them for individual ones. So for example, in here you're setting it up each one at a time. I don't know that they figured out how to a way to batch do that, to batch enable those, but this is what I'm doing is I'm choosing trend following, then I'm choosing trend reversing once per bar close, and then you just repeat that. That's obviously on Mongo. So then I would go to DDOG. I would do the same thing for whichever ones you want to, whichever stocks you want to use. So that's how that works. Yep. So that's a great question, Chris, is about the time frame. Is this strategy does use a 78-minute chart, and I didn't realize this till someone told me this last month. Is you go down here and you type 78 minutes and add. However, that is not a free feature. That is a premium feature. I didn't realize that. I have a premium version of TradingView, so I didn't realize that's premium. So if you wanted to use Momo and you don't want to pay for the premium, the closest next thing would be like an hourly chart. Now, obviously, your signals aren't going to be synced with the same ones we're using on a 78-minute chart, but that's how that works. And so on an hourly chart, you get 6-7 candles really, which is basically the market is open 6.5 hours in a day, right, gang? But here we got 7 candles. So this last candle really only represents 30 minutes. So it's not quite equally weighted. I've kind of explained that before, but that's kind of the basics of a 70-minute chart and why we use 70 minutes. So I did show the alert again. Let me know if you guys want me to do it again. If I only need bullish alerts. So when I built this, I was trading things. Oops, sorry. Let me go back into Momo. But when I built Momo originally, I was trading long and short, and I was more profitable on the long and losing a lot of times on the short. And so so typically the only thing that really works based on this strategy is the trend reversing. That's kind of what I built. And so there's not the bullish trend change. It works a little bit differently. How do you get the trend change alert, Stephen? You basically have to add this to your indicator. So I'm sorry, you have to add the indicator to your chart. Give me one sec. Ross, do any of you guys have the link to that indicator? Let me see if I can grab it real quick. And I will paste it out there for you guys to enjoy. One sec. Okay, yeah, I think I found it. I think it's right here. Let me double check. There you go. So basically what you do is you just add it as your favorite. You go down here, you click add to favorites. And then when you go back into your chart, you go into this FX indicators, you go to favorites, and it's on this list. I have a big list of things, but that's trend following. Yeah. So that's how you add it. Yeah, thanks, Edward. Let's see, did I miss anything? Not sure if 65 minutes is on the free version, but that is 6 bars per day. Okay. I don't think so, Dustin. I think hourly 30. I think hourly is free 30 minutes, and some of these intraday. Intraday timeframes are free. 3-minute chart is a division of 78. It's divisible by 78, but it doesn't. A 3-minute chart gives you more than 78 candles, right? Because a 5-minute chart gives you 78, and 78 gives you 5. A 78-minute chart gives you 5 bars, and 5-minute chart gives you 78 bars. So a 3-minute chart is divisible by 78, but it's more than 78 candles. Yep. Okay. Let's see. Any other questions to that, gang? About the alerts, about setting up each one at a time. Cal is up over 50R on Momo trade since December. Cool, man. That's amazing. I love to hear you guys' success. Yeah. Justin loves Momo. Matt the Molong. Execute the plan. Here, let me take a quick sidebar. I realize not everyone necessarily, everyone's at different trait levels experience-wise, right? Let me just talk real quick, and then I'll move on about your trading plan. So let's imagine that I am on a cliff, right? And I am in a good headspace, and I'm overlooking some kind of battlefield craziness activity, right? And I'm making my decisions of what should happen. So like what my criteria for entry, and maybe that's Momo, maybe that's something else. Maybe I'm thinking about how many open positions. I'm just in a good headspace, and I'm making some decisions that every trader has to make, right? And you guys can add to this list. There's other things you can think about, but I'm here on a cliff overlooking the battlefield, okay? Now, once I move down here to the battlefield and I'm in the thick of things, I'm not going to be able to make rational decisions and have the same viewpoint and perspective that I would have had up here, right? You guys agree? So what I could do is build the plan up here, execute the plan when I'm down here in the thick of things. And no matter how I feel, how emotional, if I just want to just give up and quit, and I want to just cuss everybody out and kick the dog, like whatever that is, obviously, if you just execute the plan, and that's all you do, and that's all your job is, then you'll be in a good place. It doesn't matter whether or not the market sells off, right? You have open stops to kick you out of those positions. It doesn't matter what the interest rate, what politicians say, like none of that really matters. You're just executing the plan. And obviously there's certain things in life you can and can't control. You can control how many positions you're in. You can control your risk. You don't necessarily control what happens to earnings. You don't control what happens in the markets. You really don't. And really, a lot of times people, they focus on the things they can't really control. And so all that, hopefully that's kind of the illustration, the thought that I have when I think of trading, executing the plan, is being able to set up your plan in a good headspace, make some good decisions, and then in the thick of things, in the day-to-day, then you're just executing your plan. Yeah, makes sense, Ross, right? So it was funny is there's some of our traders like, Matt, you always say execute the plan, but I finally get it. Just execute that plan, right? So it's really not hard. Controlling your emotions is the hard part. Trying to disconnect dollars from like your mentality where you're like, oh my gosh, I lost X number of dollars today, or I was up. You know, if you can just disconnect it and think of your P&L like a game, a video game, and that's your score, right? No one's going to get upset because someone else had, someone else had a better score than them. Of course, that's part of the competitive nature, but you really do have to just be in a good headspace, execute the plan, and that's it. It takes a huge weight off your shoulders when you're able to do that. Trust me. Yep. And Brad is saying thinking in R's and helps. Absolutely. So gang, what happens if you get up to like some people I know posted today lost 2 or 3 R. What happens when you get up to a $10,000 R and you're like, oh my gosh, 2 or 3 R loss, $20,000 to $30,000 loss. Well, you're not, it doesn't really help when you think about what $20,000 or $30,000 could buy. And oh my gosh, I shouldn't have done that. And like, you just get into the space where I'm going to make the best decisions I can on the trades, on the things I'm looking at, and let the plan, let the plan execute, let the strategy play out, and you just execute the plan, right? Yeah. So Jason's going to call Warren Buffett since they're besties at that point. I actually, when I first started swing trading, I tried to figure out how do I build this stomach for these wild ups and downs that swing bullish only swing traders typically have. And some of you guys may have heard me talk about this on the podcast, the Real Life Trading podcast yesterday, but I literally looked up on, just went to Berkshire Hathaway's website and I looked up what does Warren Buffett own stock wise right now, right? It's Coca-Cola, Wells Fargo, whatever, right? The list. And he also publishes how many shares and what their average cost basis was. And me being the astute technical person I am, plugged all that into a spreadsheet in Google Sheets. And then I added the special feature where you can take a stock and look up a 15-minute delayed price on that and do the math of how much up and down he is on certain positions and how much his overall portfolio goes up and down. And there's some days where he was down $150 million in a day. So again, trust me, $10,000 to $20,000 down in a day when you're on a much bigger R is not the end of the world. You can get ahead of yourself and lose your stuff when you start thinking about dollars, but if you think about it in R's and you're able to just execute the plan regardless of what it is, right? That's all there is to it. So we got off track a little bit. Does that make sense, gang? You with me? Type a 1 in the chat pane if you're with me. Okay. Jonathan Wage is with me. Okay. So let's take a look at TWLO, one of my other favorites. So TWLO, just going sideways right now. We did get this magical trigger right here on TWLO. I'm not in this right this second in my manual account. However, I'm guessing I might be in my automation. Here's a cool part about automation, guys. You don't even really know what it's doing. I got to look to see what it did. It already made some decisions without me. TWLO, there we go. I got 4 shares in my daughter's account, 4 shares. What am I going to do with all that money? So that's the cool part about automation. Besides that, you also can free up a whole bunch of your obviously you can free up a whole bunch of your time. And then you don't necessarily even have to understand what these strategies do. It's helpful when you make a decision to invest in software like that, that you know what it's doing, you have a rough idea, but you don't even necessarily need to know what's going on behind the scenes, right? When you plug in, yes, I want to subscribe to Momo and I want to connect my Robinhood account to that, right? You don't really need to know all that. So, yep. So TeleDoc, apparently I'm long in TeleDoc in my automated account. Let's take a look. Yep. Let's take a look at Etsy. I'm sorry, not Etsy. Elastic, ESTC, Elastic. So it looks like we're chopping around on this. You guys can see that we're kind of making a series of higher lows here. So we might get a trigger to jump into that maybe tomorrow, maybe on Monday. Yep. Stephen Jackson asked, what percent of the account do you use to buy on the automated signals? I actually have a separate account, like I hooked up my dollars account to it. And so the ideal way is if you have 15 stocks on your watch list and you want to allocate the same amount to each one, then you would use 6.7%. So 6.7% times 15 is roughly rounded to about 100%. You use 100% of your account, 6.7%. That's how it works mathematically. So that's the idea. Yep. Elastic got a little signal for 10 EMA to get in today. For those of you who aren't in there, CrowdStrike we talked about briefly. I like this. Be bullish. I need to move along here. I'm kind of behind. Shopify, our 70 plus X company, 72 times revenue, 72 years to break even. It's up there. It's definitely up there. But if you guys can see, there's plenty of opportunities to get in along the way. Obviously, Shopify's kind of went sideways for a good 6-7 months, made a new high, kind of bounced off that previous resistance, and then going higher is what it looks like to me. I did have some, I didn't parse through the earnings. Robert, did you guys do a Shopify earnings review? I'm not sure if I saw that or not, but that'd be a good one to look at, right? Oops, sorry, we did not. Ooh, can I put that on the wish list? Maybe Santa comes early for Matt. Okay. This was a good run. Look at that, gang, if you're able to get into here. Good run up on Shopify for Momo. NVIDIA next. Telling us to be bullish, and it is chopping around. I did actually buy some longer term call options right through here. You guys can see that this was a super mixed bag of signals. Be bullish, no, be bearish. And through this time, I got whipsawed so many times. I'm like, I'm just going to hold my options. Absolute zero. Lost an hour and a half. No one's going to cry for me. And then it expired, and then it decides to go higher. So I did have some shares on that. It does happen, right? It's not the end of the world. You want your R's to be sized enough that it just feels like a paper cut. It's not the end of the world if you lose an R and a half. Okay, next up is Roku. Be bullish. This is quite the beast, ladies and gentlemen. If you're to look at this on a weekly chart, look at this. Look at that. Whew. Does anyone have any reason not to believe that it might pull back somewhat? But this is what a bullish trend looks like. You guys can see it was kind of a little bit sleepy during this time. Starts to wake up a little bit, kind of pulls back, and then, man, watch out. Moon Lambo. And I was able to capture some gains on bits and pieces of this along the way. But, man, be bullish. Roku. Next is BYND. If we were to look at it on a daily chart, look at my put indicator. So in this case, I don't have any positions on this right now. It looks like we're in a little bit of a bearish downtrend in Momo, so not in this, but I was, Jonathan can verify, the automation grabbed some shares in my live account. I'm sorry, in my in one of my accounts in Traders Post. Grabbed some shares, went higher and held, and then exited here. Now, the cool part about automation, it makes decisions for you. The downside is obviously I could have like captured and closed it up here. I could have manually went in and override it, but I want to see what happens. I want to see what happens if I can let this thing run and see how this works over a period of time. So that's BYND. Next up is Pinterest. Okay, and I'm gonna have a guest come on here in just a second. But Pinterest, I have a bullish on the shares. I have call options and I have a collar set up on Pinterest. So there's my collar, ladies and gentlemen. I have a $95 covered call that I sold. I forget exact premium I collected, but I use that to buy a lower price strike. So hopefully we go sideways. If we go lower, I'm protected below this level, below the $86 level. If we go higher, up above 95, then I give up all the upside, and I have like a $78 cost base, no, $73 cost basis on that. So no one's going to cry for me when I go from 73 up to 95. Plus, obviously, I collected some money on the covered call. So that is Pinterest. Let's go back. Any thoughts, any questions on this so far? Next is Cloudflare. This is one that I'm looking at seriously to maybe replace AYX. I've not made some final decisions, but I'm debating. So Cloudflare's made a huge run up. My previous software company used Cloudflare a lot, and you guys can see what a whole bunch of goodness there. If you missed it there, you got some other opportunities to get in, and it looks like we're just kind of chopping around, right? Kind of making a little bit of a double bottom, a new high, and then pulling back. So this looks like one that is very, very interesting to watch long-term. If we do have like a big sell-off, I might be buying some leaps on this, right? So if we were able to get down a little bit more, maybe down here to this one under some moving average around the $70, I'll probably buy like an 80 strike leap. So that is net. And there was one other one on here, apps. Yeah, so this is one Jeremy mentioned the other day to me. Another very, very, very bullish trend, right? What's interesting with these S curves is that makes a high, pulls back, makes another high, pulls back, makes another high, pulls back. You guys seeing a pattern here? New high, pulls back, new high, pulls back. And we can almost anticipate what would happen next, just based on the probability of what's happened previously, right? And so this is not on my watch list. This is another one that I'm looking at replacing AYX, but entry, stop, be bullish. That's what I have on apps. All right, gang, I have someone I want you guys to say hello to. You may have talked with him previously. If I can find him. Where is my list? There we go. Let me see if I can grab him real quick and have him come on and say hello. He is in my mentoring group. His name is Hoff. Hoff, are you there?
Yep, I'm here. Can you hear me?
Yes, we can. How are you, sir?
Been better.
You've been better. All right. Everyone say hello to Hoff in the chat pane. Say hello.
What's up, guys?
All right. So I'm hassling Dave hassling them. All right, Hoff. So you trade. Tell us a little bit about the strategies you use. Tell us some strategies, what you trade with. Tell me. Talk to us.
Okay. So for the most part, what I do for my swing trades is I follow just the Momo and the 10 EMA.
Okay.
I've put a lot of work into the 10 EMA strategy just to make it my own. I had some rules and stuff like that I came up with that have been working amazing for me. Okay. But one of the other ones, I'm not sure if you want me to talk about that at all, but one of the other ones that I use is the Momo. And on the, can you see my screen?
You got to click share screen at the bottom of the.
That would make sense. I don't have that option.
Try now.
No
option. Go ahead and just.
Okay, so don't worry. All right. So one of the things that I use when I do the Momo strategy, in particular, that I found really interesting.
Oops, sorry about that. I promoted you to a panelist. Are you there, Hoff?
Yep.
Sorry. I think you should share your screen now.
Okay.
Sorry, gang.
Let's see, desktop, share.
And tell us, how long have you been with real life trading?
I've been with real life trading since about April.
Okay.
And pretty much I've been able to almost quadruple my account since then.
Wow.
So, and a lot of it has been due to my swing trading. Basically, a lot of it's been due to the 10 EMA and the Momo strategy, and a good chunk of it was when I learned about your pyramiding strategy, and that I've really made a lot doing that. That's most of my wins from there.
Yep.
Uh,
It's a little bit slower strategy, right? But you can make some bigger wins with that as well. Yeah. Now tell us, Hoff, you work a full-time job, correct? You work in New York.
I work in New York. I work for the Department of Sanitation, and my job is basically creating all the snow routes for the city and in charge of all the snow removal.
Gotcha.
So based on that, I used to do a lot of day trading. For the last couple of years, I was strictly a day trader. But with my job, it was really tough to maintain doing that. I found myself, sneaking off to go to the bathroom for an hour with my laptop just so I could kind of day trade for a little while. And I was doing okay with it, but it wasn't working great. So I decided, you know what, let me try swing trading. And pretty much the Momo and the 10 EMA have basically changed the way I do all of my trading, and I love it. So one of the things that I really noticed with the Momo trading that I thought was really interesting was that I had a 50% win rate. So basically, if I won two, I lost two right after. But I was always profitable at the end. And I thought that the really cool thing about Momo was that it kind of it limits your downside a lot. And so as I've been trading it over the past, few months, one of the things that I was always nervous about when I started was, well, since there's no stop loss, I've always traded with a stop loss so that I knew how much risk I had. The Momo doesn't really have a stop loss. There's no real calculation with it. And that kind of made me nervous, but I went with it. I went with your rule of 6.7% for all of my trades, since I trade the same 15 stocks as you pretty much. I have like one or two that I use that are different that I like. But otherwise I do 6.7%. And to be honest with you, I've never lost more than a full R. Pretty much like 1.2 Rs has been my biggest loss with Momo, with stocks that I've been trading with.
And you use options or the actual stock then?
I mostly use the regular stock with this.
Got it.
I do occasionally use options whenever it has the exclamation point.
Okay.
And when I do use options, I buy about 3 months out with about a 0.40 delta with it.
Yep. So slightly out of the money. Yep.
Yeah, I don't hold on to it for usually the reason why I buy longer is because sometimes Momo can go for a little while. So I don't really want to limit it. And also if it has a little bit of a down period before it picks up, I don't want to have my options automatically get killed just because I don't have enough time with it.
Right. Gotcha.
Cool.
So what are we looking at now? We're looking at DraftKings, one of your favorites, right?
Yeah. So I do use this. I know this is not one of the 15, but this is one that I've had a lot of good success with. So if you see my watch list over here, basically what I do is I color code the stocks so that when I'm looking at that, I know, am I using the Momo strategy for this one or the 10 EMA strategy for this one? And so I don't get myself confused.
Got it.
So currently, these are the ones that I'm in right now with different strategies. The blue is the Momo strategies. But just going back, I want to show you a couple of the ones that I were in. I had 2 winners, 2 losses. And even though I had it was a 50-50 ratio, I still ended up making 2.93 R on it.
Yep.
Between the two. So this is the one where I got in on DraftKings with the exclamation point, and I bought it. So now what I normally do with the Momo strategy, which is just slightly different, is I use the arrow as an indicator to say, okay, take a look at this stock and try to get in it. And then I switch over to a 5-minute chart, just to kind of use my other skills to say like, well, if it's kind of forming an inverted hammer, maybe I'll wait till it pulls back to a support line to get in. But I always try to get in like, within a few minutes of the Momo triggering, just to try to get the best price entry.
Right.
But it's always during this one candle.
Right.
During that 78-minute time period. So I ended up getting in about over here and getting out over here.
It looks like it chopped around a few days, like a good 3-4 days, just up, down, right?
It did. It chopped around a little bit. And the hardest part is trying not to look until you get the signal. Because, when it gets down to here and you realize you're losing in your account, it's hard not to look. You just got to kind of trust the process.
Right. Got it.
And so I've been doing that. And to be honest with you, if you could try not to look at,
Yep.
at your stocks, you'll be a lot more successful. I've learned that lesson the hard way.
Right. Yeah.
But
it's almost like you end up sabotaging yourself, trying to tighten a stop or doing something, right? And you end up getting kicked out of a trade, taking a loss or a small loss, and then the thing rockets in your direction anyways, and you're like, oh, I should have just left it alone, right? Yeah.
Right. And my kryptonite in the beginning was that I've always traded on a 5-minute chart because I was always used to day trading and scalping.
Right.
And so, I would look at, I would just look at these stocks and say like, oh, wow, like I could tell this stock is going to dip down for sure. It's extended. And, and I would just get out of the trade just to watch it maybe dip, but then go higher. And I wasn't in it anymore. Right. And so I noticed that when I just don't look until the alerts go off, it's just the simplest strategy in the world. And I've been made a lot more money doing it that way.
Right. And a lot of people have told me just personally in DMs and email that they struggled with a strategy that until they found this, where you didn't really know when to get in and when to get out. Right. So a lot of people can make decisions on when to get in, but when do you get out? And so this kind of solves that issue, right? It tells you when to get in, it tells you when to get out. And it's not every single trade is profitable, but over time they are profitable. If you're seeing, even with 50-50 odds, where you place 4 trades, you win on 2, you lose on 2, but you're still profitable overall after those 4 trades have finished, right?
Right.
Cool. And so do you set up alerts on your phone? How do you actually implement this since you work full time?
So basically, the way I do it is because I'm a little paranoid that I'm going to miss something. I set up the alerts on TradingView. So you can see I have all my alerts for all my stocks on here.
Yep. And
when one of the trends change, I have it send me an alert on TradingView if I happen to be on it. And it also sends an alert to my email, and my email sends me push notifications. So usually when an alert goes off, I usually get about 3 notifications at the same time.
Right.
But at least to make sure that I'm not missing anything.
Gotcha. Cool. So Mike Teague had a question for you. You ready?
Yeah.
He says, do you use the 10 EMA and the Momo together? Like if they both trigger, do you go long, or do you use them individually, or do you stack them? How do you do that?
Oh, I do use them individually, but obviously, so what I do with that, it's a good question, is, my account is a medium-sized account. It's not huge. So I can't always be in everything at the same time. So like today, a whole bunch of stocks triggered on the Momo, a lot of them. And, I can't afford to be in all of them at the same time. So what I will do is try to look to see if it is triggering a 10 EMA, even if it's during the middle of the day, if I see it starting to trigger. I know that's not the technical rule. You wait till the end of the day. But if it is triggering the 10 EMA and it's triggering the Momo at the same time, those are the stocks that I would choose.
So those are higher priority, is what you're saying.
Correct. If 4 stocks trigger on the Momo, but 2 of them are showing the 10 EMA at the same time, I'll choose those 2.
Gotcha. Cool.
Mm-hmm.
Cool. One other question came in. Rick asked about the R system. Okay. How do you place stops when using Momo?
Okay, so you really don't place stops. So what I do is, and I know you spoke about this earlier, is I basically take my account size and I times it by a 0.067, which is 6.7%, just because I have 15 stocks in my watch list also. And that's so then I know it's almost $1,500 on my account. I could spend almost $1,500 per in shares for that particular stock. Okay, so that tells me how many shares I can get, and then I just ride it until Momo has the exit long, enter short arrow, and I get out, pretty much right then and there.
So even though Momo has a risk management built in, it doesn't use like the R calculation.
It doesn't. So what I noticed is,
and you're using shares in your example here, you're using shares. So that's not really, there's no absolute zero, obviously, right? Because the stock would literally have to go from $60 or wherever you entered over here at 54 and change. But have to go from 54 to zero to be absolute zero, right? And so what you're doing is you're jumping in when it says get in, you're jumping out when you, so you use the traditional way of doing Momo where you're using a size base, you're sizing your shares based on spend versus a risk calculation, correct?
Correct, right. And like I said, using that strategy, the most I've ever lost, and it happened very rarely, was I think like 1.2 R. Most of the time it's even less. So like even if you look at my two losers, these were my two most recent losers in Momo. This one was a 0.3 R loss, and this one was a 0.25 R loss. So they're small. They're small. And if you look at the two wins I've had, this one was 1.28, I'm sorry. And this one was a 2.2 R win. So, even though it was a 50-50.
You got that one early, it looks like.
I'm sorry?
It looks like you got that one early, right? Or no?
Oh, I'm sorry. You know what? This is from my 10 EMA one. I apologize. Sure. This was the one.
That was one of your losers?
This one was one of my losers, right? Yep. I got in right over here and took me out over here.
Gotcha.
Right. And then the elastic was my other one of my losers where I bought it up here and it triggered down here.
Got it.
Right. But the losses are still small.
Cool. So let me ask you one more question and we can run. Does this work on cryptocurrencies? Show us Bitcoin with Momo. BTC, USD.
Yeah. I mean, I've only back traded on cryptocurrency in all fairness so far. Yeah. Because I don't know much about crypto. I'm looking to try to get into it. I signed up for the class for tomorrow, so I'm hoping to learn more. But from my back trading, looking at it, it does work very well. And another interesting thing too with Momo is me personally, I will also look at Momo on a daily chart instead of just a 78-minute chart also. And the pros and cons of that, from my experience, are the wins a lot of times are more substantial on the daily Momo ones.
Because you're in longer, probably you're in for months.
Right, they come a lot rarer, which is the downside of it. You have to wait longer to get into trades. You might have to wait for sometimes days, weeks to get into trades. And that doesn't happen as often to the 78-minute chart. Right. But when you are in, the wins tend to be a lot bigger if you have the patience.
Yeah,
so it just depends on how long, how much time you have to trade and how much energy you want to put into it.
Right. And some of those I saw, you might only get 3 signals on a stock in a whole year, 3 trades in a year.
Right. Like Tesla hardly had any, but if you were in a Tesla Momo daily, you made a fortune.
Right. Yeah, absolutely. Yeah. Cool. Can you plug in BTC USD real quick into your chart there?
Yeah, I do have it right here.
So gang, this is Bitcoin. What are you guys noticing about Momo? So this is actually a segue into, we are starting a crypto class starting tomorrow. So starting on Saturday, that is not a goof. It actually is a Saturday, Sunday, Monday class. And so, Russ, Bitcoin is up in the 55,000 mark. I remember when people said 4,000 was too much. You guys remember that story of that guy who used like 100 Bitcoins to buy a pizza or something? Oops, right? Hindsight's always 20/20. Cool. Thank you so much. Ladies and gentlemen, let's give Hoff a round of applause. Thank you. Put a 2 in the chat pane if you learned something new. So gang, we can always have, Jeremy and I can always say, here's how it's working. I want you guys to hear from an everyday trader who does a full-time job, who has a full-time job, who has been with us less than a year, up and coming trader. He'll have his own mentor group someday, right? And so I want you guys to hear from these guys. Yeah. And so they're guys and gals, right? A week or two ago, we had some females on that are up and coming as well. So, all right, gang, to close out, let's go ahead and hit me with your list of stocks that you want us to review on Merchant Monday. And we can go play in the snow after that. Hit me with your stocks. Merchant Monday, we got FSLY, FSLY, we got ENPH, TSCO, AMWL, Bumble, BMBL. What else? XPEV, never heard that one. SDC. Yep. AYRO, GOCO. Yes. Ollie, GOCO. I got that already. Pen, Edit, FCEL, LTRX. Anything triggering Momo. We have to look at Momo on specific stocks. So yeah. Okay, XPF, Lucian. Yep, thanks. All right, gang, thank you so much for your time. Thank you, Hoff, again, for joining us. And again, ladies and gentlemen, don't forget to love life, live life, and trade it. Have a great weekend. Stay warm, stay safe. Thank you, guys. Yep, thanks.